Karie with Carico Real Estate, and I'm here with Ashley McKenzie Sharpe, and she's with Highlands Mortgage. And we are just going to chat today all about investment properties, mortgages, all different kinds of investment property products. But, Ashley, how are you doing today?
Doing good. Doing good. How are
Good.
you?
I'm doing good. What's been going on lately?
Just trying to lock some loans and get some people squared away. Not much. What are you up to?
Not much here. What are you gonna do for Halloween? Anything fun?
I have something very fun I'm doing.
Oh, what are you doing?
I'm gonna have a colonoscopy on
Oh, fun.
Halloween. So I guess I'll cleanse and then eat all my candy.
Very good. Very nice. Very nice. That sounds
Ah,
like a fun
so
Halloween.
much. Ah,
Yeah.
this is
Yeah.
what happens when you're old.
Yeah. The fun test that you get to do as you age. That's so funny. Anything
Mm.
else? Have you done anything else fun lately?
Not really. I mean, just been doing yard work and walking with Birkin and,
Yeah.
being with the fam.
Yeah.
What about
No,
you? Have you done anything fun?
well, my brother was here for like a week, and that was fun. So I had to like recover from that because that was a lot of activities. That was like more activities than like most North Carolinians do in like a week. Yeah. So we went to Chapel Hill, we went to Duke, then we went to a Wake game, then toured Wake's facility. We went to a NASCAR race in Charlotte for the day, and then toured all of Winston-Salem. So yeah, that was a,
Okay.
that was a
So
lot.
this weekend you're resting.
Well, yeah, that's what I've been doing kind of like the past week because he left like a week ago. And so I've been like recovering. It was really fun. And I've never done, I've never gone to a NASCAR race, which I was kind of impressed with. I was like really surprised. So I've been, recovering. So that's kind of what I've been doing. And that's kind of it. And just,
Never been to a NASCAR race? I can't
yes.
believe that.
Yeah, I was like surprised. I was impressed. I really had different, I did not know what that was going to be like. And I was like, oh, okay, this is kind of fun. So
They're definitely fun and
yeah.
loud.
Yeah. Now you are so you've probably gone to a few.
Gone to a few in my
Okay.
life. Yes.
Okay.
Just a
Yeah.
few. They're
Yeah.
fun. They're
Yeah.
definitely fun.
Yeah. Loud, but they're fun.
They're very loud.
Yeah.
Yes.
So I
They don't
guess
tell you that.
yeah. Oh my gosh, they're loud. So I guess we should probably get started and kind of chat all about investment products. So one of my first questions I have for you is what are the key benefits of financing an investment property instead of paying cash? And then we can kind of go into different kinds of products.
I think a lot of that has to do with, your tax write-offs, right? I mean, if you've got mortgage interest, that's a write-off. So now all of a sudden you can depreciate and write off that property and the expense. So, I mean, it's definitely a fun tax method that people can use.
Mhm.
And a lot of people right now are
Yeah.
probably making more on their money than they're actually paying in interest. So, if you can, take a rate of 7% and buy an investment property, do that all day long and make
Yeah.
more on your money instead
Yeah.
of, just paying your cash out.
Yeah, yeah. No, I totally get that. And there's so many different kinds of products. But first of all, like before we kind of go into the products, everybody thinks that you have to have cash. You have to buy investment properties with cash. It's all over here. And I'm like, wait a minute, hold on. We need to chat because you really don't need that much cash. And so that's always the statement, well, I don't have enough money yet. And I'm like, wait, what do you have? Let's see. You really want to put all your money out. It's probably better to finance it and then keep all that cash back. So in case, you need to flip it or make repairs. But what are what scenarios where financing makes more sense than buying a house with cash?
I mean, I think if the home is in good condition, right, and
Mhm.
it's move-in ready, then I think financing is fantastic. If it's a property that needs a whole lot of work,
Yeah.
right, and you're gonna have to go in there and gut it, then maybe you pay cash for that. and you go in, you do the renovations, and then we come back in and we put financing on it later.
Yeah.
That to me is, the perfect opportunity to, you would want to use cash if the house is in disarray,
Yeah.
move in, 100% do financing.
Yeah, yeah, for sure. And what types, just in general, what are like what types of loans do they have out there for investors? Like just
That's
in
the
general.
fun part. I
Yeah,
think a lot of people think, okay, well, I don't think that I'll qualify for an investment property.
yeah.
Well, if you have 20 to 25% to put down,
Hmm.
we literally have a loan. It's called DSCR,
Uh-huh.
and it's a debt service coverage ratio, is what
Yeah,
that stands for. Literally, if you have a payment, your mortgage payment is $700 a month,
yeah,
and the rental income is going to be $700 a month. You're at 1 to 1, you can actually close, and we don't have to document your income. We only document your assets for your down payment, and we
hmm,
document your credit, right? So you want to have strong credit and strong assets for your down payment, but you don't have to pull all of the documents that you typically need
yeah.
for a purchase. So it makes it really, really easy and very streamlined.
Yeah, yeah. And I love those loans. I think those are some of the best loans for definitely for investment properties. And what types of properties qualify for an investment loan? So if somebody's just, just in general, if somebody's out there wondering.
I mean, you can do single family residences,
Yeah,
townhomes, multifamily properties. Um, you can do some condos. Condos can be a little more difficult
yeah,
because most of them, if you're going to buy it as an investor, are going to be non-warrantable.
yeah,
But we still have options,
yeah,
right? You could still finance those. We
yeah.
do have options. So basically, any property that you find,
Hmm.
we can, pretty much do some type of financing on it. You might want to steer clear of manufactured. Manufactured can be a little difficult
Yeah.
as an investor.
Yeah, yeah, for sure. And can you explain the different options for like multifamily? What do people consider multifamily? And then also the different options for like a short-term rental. So I can that was kind of lot of questions in one.
So for a multifamily would be something like up to 4 units. So you could
Okay.
go and buy a quadruplex,
Yeah,
right? And you could literally make money off of all 4 units,
which is
have
the
one
best thing.
mortgage. It's
Yeah,
amazing. You can rent
yeah,
out all four. I mean, if you find a quadruplex or a duplex, any kind of multiplex, they
yeah.
are typically a gold mine.
Yep, yep. And everyone's looking for them. I'm
They
always looking
are.
for them. Yeah,
They
for
get
sure.
gone quick, but yes,
Yeah.
we can definitely finance those.
Uh-huh.
Um, I know you mentioned short-term
Yeah.
rental. Thing we could do long-term or short-term rental,
Hmm.
and we can actually still do the DSCR loan.
Okay.
So just depending, I mean, so I've got a lot of clients who purchase at the beach. Well, that's more of
Yeah.
a short-term rental
Yeah.
market.
Yeah.
And so we actually comp that out with short-term rentals. The
Yeah.
appraiser actually is the one who sends in what that rental income is going to be estimated at.
Yeah, yeah, definitely. And those are so popular, like beach homes or mountain homes. And those are sometimes great investments and some most of the time they're pretty easy one-to-one ratios. So I agree with you.
Yes,
Yeah,
very
definitely.
easy.
So if somebody is out there and they're watching this and they're very new to investing, what particular property types do lenders or look at more favorably?
I mean, I think any kind of like single family residence is going to
Hmm.
be the most, you know,
Yeah,
popular. It's going to give you the lowest interest rate, that kind of thing.
yeah,
But townhomes are still a good deal. I mean, if you can grab up a townhome or again a multifamily,
yeah.
all of those are going to be great. Condos, again, those are going to be a little more difficult to finance.
Yeah, yeah, definitely. And I've heard that loan options are, if you own multiple investment properties that you can get another loan. But could you tell us more about having multiple investment properties and then getting additional loans? Are there limits? Or how does that work?
Well, typically you're going to say that there's a limit of up to 10 finance properties, but
Mhm.
now with all of the different investors that we have, you can go beyond that.
Yeah,
So, I mean, there's not a lot of people who have 10 or more that
yeah,
are financed,
Yeah.
but we can definitely still make it work if you do.
Yeah. Yeah,
So
definitely.
no limit.
Yep. Yep. And how does having a multiple properties affect the loan process?
I mean, if you're doing this debt service, the DSCR loan, it
Yep.
doesn't. It's like fantastic. You don't have to document all this stuff,
Yeah.
right? I mean, we can literally go in, we get the rent, it covers the mortgage, we're done. So we don't have to
Yeah.
worry with debt to income ratios, which is
Yeah.
something that's really common when you have multiple properties. We have to fill in tax returns, taxes, property taxes, mortgage statements, all of this mess.
Yeah.
But if you do the debt service loan, you don't have to get any of that. So
Yeah.
it makes it very, very easy for you to close.
That makes, yeah, definitely. And so can the rental income affect your eligibility for a like another loan or an investment loan?
So the rental income on the property that you're
Yeah.
purchasing definitely can. If you're doing just a regular conforming loan and you
Yeah.
have other rental properties, then the rent for those homes will
Mhm.
offset the mortgage payment traditionally. I mean, we'll get a copy of the lease, we'll get a copy of the tax returns, just depending
Yeah.
on how long you've owned the property, and just
Mhm.
make sure that there is actually coverage. But typically, you're going to have from the tax returns or the
Mhm.
lease agreement income that will offset at least the mortgage payment that you have on the property.
Yeah, yeah, definitely. And so I've always heard that when you do have an investment property, and let's say you want to buy another one, is there a length of time that you have to have a lease for the income to count?
Not necessarily. So, I mean,
Okay.
with the DSCR loan, no,
Okay.
it's fantastic. You can be a new
Okay.
investor. It's great.
Yeah.
If you're doing just a traditional loan, then typically we're going to want to see a lease agreement.
Hmm.
And we're gonna wanna see their first month's deposit, whatever that
Yeah.
looks like, deposited into your account. Sometimes we'll want to see 6 to 12 months rent. If it's on your taxes, then obviously we have to defer back to your actual taxes, your income taxes,
Yeah.
to see whether or not, what income we can use. But yeah,
Very cool. So, and also because, I sell real estate, so this, I'm put it in this category, but what if you don't have traditional income? How does that affect getting an investment loan or, or just
any
a
loan,
loan
yeah.
product for an investment property?
So typically, before the last probably 12 to 24 months, we had to actually request 2 years of tax returns, and we would
Mhm.
use whatever the income is from the tax returns.
Yeah.
And a lot of people have very good accountants
Yeah.
that help them write off a lot. And so they don't end up netting what they really make.
Yeah.
So we now have a loan called a bank statement loan. So
Hmm.
we can literally take 12 months bank statements from your business, your personal, whatever it is that you use, and we basically average out the deposits into the account, and that is your income. It
Hmm.
is a game changer. I mean, you will qualify a lot easier using your bank statement income as opposed to your tax returns traditionally.
Yeah, yeah, definitely. And those are really helpful for a 1099 or, self-employed person
Yes.
for sure.
Yes.
I can tell you for sure that that fact. So, you had mentioned it earlier, but I just want to like restate this. How much down payment do you need for an investment property to
I
purchase
would
one? Or
say to
yeah.
get the best interest rate, and for most of these kind of like non-traditional products, you're going to want to put down 20 to 25%.
Mhm.
25% is kind of that magic number.
Yeah.
So if you can do 25, that would give you the lower interest rate.
Well, yeah, and
It's worth it.
it's also gonna, like, create, like, a better cash flow, so, yeah, I agree with that, it's a little bit more
Definitely.
safe, than doing lower, but that goes kinda to my next question, is there any low, or 0 down payment loans for investment properties?
Not to my knowledge, I don't think we have a product. I mean, for an
Yeah,
investor, right? I mean, that's going to be a more risky product because that
mhm,
if you're going into a season of foreclosures and things like that, the first
yeah,
property that someone's going to let go back is going to be an investment property traditionally, right? They're not going
yeah,
to let go of their primary residence. So anytime you have an investment property, you're going to want to put down on average at least 20%. I
Yeah.
don't know of many people that do any less than that, maybe 10%. There may be someone out there that still offers that.
Yeah. Yeah. I don't know of anybody, but I
I
think
don't
it's,
either.
yeah, I always hear
Maybe.
20%, but it also makes it safer because something that maybe wouldn't cash flow, doing the 20%, maybe it will cash flow, and it just makes the numbers make more sense. And just your whole rental, it's just a little safer in that sense because you're walking in with a little bit of equity too. So I
I
don't think it's a bad idea, you know?
I think
So
it's a good idea, and I mean,
yeah,
you're in a better position, the lender's in a better position, everybody's much happier when you're when you
yeah.
have, like, 20 to 25% to put down.
Yeah. So next question is about interest rates. How do investment loan interest rates compare to like primary loans? Interest rates like on a primary residence.
Typically, your investment property loans are going to be a little bit higher, right? So if the
Hmm.
primary residence loan today was around 6.5, your
Hmm.
investment property loan is probably going to be 7.5, 7.75. So you're going to typically take that 1 to 1.5% adjustment for investment.
Yeah.
Again, 25% down can help alleviate a little bit of that pain.
Yeah.
But if you're going for 20, you're definitely going to probably pay 1.5 to 2% above your market rate.
Yeah.
If you're using one of these products like the debt service loan we mentioned, the bank statement loans, those are going to be higher interest rates. But again, if you put down 25%, they're, right now, you're going to probably get a rate in the sevens, which is
Yeah.
actually not that bad. That's
No.
actually a decent interest rate.
Yeah. I was gonna say I don't think it's that bad because I think our last uh investment loan rate is like in the sixes. I think I've told you what it is. I can't remember, but it's in the sixes. And I don't think I look at it now and I'm like, oh, that's not a bad loan.
Right.
Not at all.
No,
Yeah.
we just got spoiled with the
Yeah.
2 and the 3 and the, everything that was going down.
Yeah, yeah, for sure. Now, with investment loans, do you have different terms? Like are they still like a 15 or 30, or is there different options for investment products?
Additionally, you're gonna wanna put it on a 30-year fix. I mean, most people do. Every once in a while, have somebody that says 15 or 20. So you
Hmm.
can actually do, different terms. You can do an ARM. So there's some
Yeah,
adjustable rate mortgages, but in this rate environment, currently, it is still probably the most popular is the 30-year fixed.
yeah, yeah, definitely. I would say it's probably a better idea because if it's an investment property and you've got equity in it and somebody's gonna, I mean, it just seems like it would make more sense. And then if the rates
Cash flow is
drop,
better.
yeah, just go refinance it. Or if you flip
Yeah,
it, there's so many options. So I agree with you that I'd probably just go straight. But I mean, if you could find a good deal, do whatever you can. For sure. So does somebody's credit score affect the interest rate for investment loans differently?
definitely do. I mean, the higher the credit, you're always gonna get a better interest rate, right? So if your
Hmm.
credit score is 760 and greater, you're gonna be in primo land.
Oh, yeah.
If you're at 740 and greater, you're still gonna get a great interest rate. When you're an investor and you go under 740, so maybe 720 to 740, that's gonna be kind of a different, echelon. You're still gonna get a good interest rate, but it's
Yeah.
just you're not gonna get like the primo rate. If
Yeah.
you're in the 600s, like 680, you're
Hmm.
gonna take a much higher interest rate. I
Yeah.
mean, we're not gonna be talking sevens at that point.
Yeah.
So credit's always important.
Yeah,
Always.
I definitely agree, and that's seriously gonna affect your cash flow. So I think that your credit score is like really important because it affects all your other numbers, like when you're running numbers on a house. So I definitely agree with you. Now, one other question I have, and I'm only asking this because I think there's people out there that might be interested if this actually exists, but I don't think that it does. But is there any programs for first time investors or anybody that's not, like a, first time? I mean, I
Reasons.
know there's first time home buyers, but first time investors.
First time investor, again, the DSCR loan is going to be a
Yeah.
great option because of the fact that you're immediately going to go and use the rent to offset the payment. So it's easier to
Mhm.
qualify.
Yeah.
So I think that's a great option. There's not really, a first time investor,
Yeah.
down payment assistance, low down payment there. If you're an investor, you really need to have money saved. They want to see reserves. We want to make sure that you're in a good position to
Yeah.
own multiple properties.
Yep. Yeah, definitely. And reserves are huge. I mean, it's just huge because you just never know when something's going to break. Even a
Exactly.
dishwasher, which could only
Or
go
if you
through.
don't have a renter. Like, what if
Exactly.
your property's not rented?
Yeah.
You still have to be able to make that payment, even when
Yeah.
you don't have it, a tenant.
Yeah, for sure. So another quick question is, we went over this earlier, but I just figured we'd probably reiterate it. Is there a maximum number of loans that somebody can get when they purchase investment properties?
I mean, so on a traditional loan, then typically it's 10.
Mhm.
But now we have a lot of different investor products that we can use, and you
Yeah.
can exceed that threshold. So there's
Okay.
really not a limit.
Yeah.
It would just be something that we would have to sit down and talk through. The debt service loan is going to be like key in
Yeah.
that, territory where you own a lot of properties, just
Yeah.
because it just makes it really quick and clean as
Yeah.
far as documentation goes.
Yeah, yeah, definitely. I can definitely see that. Now with refinancing investment properties, can you refinance investment properties? Does it fall under the same rules as a regular residence?
Not exactly. I mean, it's
Uh,
close. So if you have an investment property,
yeah.
and let's say that you purchase it with cash, you
Uh-huh.
can do something where we'll actually do a loan on the property. So you can do delayed financing
Yeah.
within 60 days of closing
Uh-huh.
on the original purchase. So if you pay cash just to get the deal closed, then you can put financing on it within 60 days. That's a cool tip.
Yeah.
Another one, if you do have a property and you want to do a cash out, you have
Mhm.
to own it for 12 months.
Okay.
So you
Okay.
need to own it for 12 months in order for us to actually use the appraised value, not acquisition cost,
Yeah.
appraised value. So most people, when they buy an investment property, they're going to try to get a good deal. They may go
Yep.
in and renovate. So the property is going to be worth more
Yep.
after they initially purchase it. So yes, I mean, that's definitely something where you would need to wait 12 months before we can actually use the appraised value instead of the
Yeah.
acquisition.
Very cool. And the last question, just I know we've done a lot of questions really fast, but my last question is, so when you refinance it, are the rates still different than like a primary home?
They are. Yeah. I mean, you're still going to take
Okay.
a little bit of a premium rate for
Okay.
an investment property. Investment property, secondary residence, all of those kind of fall in the same boat.
Mhm.
Um, as you know, they're going to be in the sevens right now. If the rates will
Yeah.
ever come down, then maybe we'll be able to say sixes again. That'd be
Yeah.
fun.
Yeah, definitely. And lastly, so if you're like if you're refining an investment property, does it cost the same amount as when you refied like a normal residence?
Oh, yes. Yeah, I mean,
Okay.
there's not like a lot of extra closing costs on an investment property. I mean, it's still
Yeah.
gonna be your appraisal, if you have escrow, and then your attorney fees. So
Okay.
it should be very similar to just a primary refinance.
Yeah. Okay. And last question. There's one more question because people always ask me this, is that when you're refinancing an investment property, is it similar or, the same as when you refi like your home in your residence? I mean, do they pull all the documents? Is it the big hoopla?
Is if you're
Yeah.
going through like the traditional channels, the conforming Fannie Freddie,
Yeah.
then yes, you have to supply all the documentation.
Okay.
If you're going to refinance through one of these debt service loans,
Yeah.
um, that's just a really streamlined process where we just don't have to document so many things. So
Yeah.
for most clients that call me, we'll do a comparison. I'll look at the debt service loan, I'll look at the conforming loan and see which one makes the most sense, which one's going to
Yeah.
save them the most money, and then let them decide if they want to dig in and send all the documentation, or if they want to
Yeah.
go the quick route and
Yeah.
go DSCR.
Because it's a lot of work to refi. So, I mean,
Yes,
yeah,
lots of
just,
documentation.
yeah.
But if you're very organized, then it should be a very quick process for you.
Yeah, for sure. Well, Ashley, I thank you so much again for coming on here today and talking all about investment loans and different investment properties. And all Ashley's information again will be below, or just reach out to me and I can definitely hook you up with Ashley so you can ask her all your investment questions and loan questions. But I thank you so much for coming on today and chatting with us. It means the world, and I love chatting with you. And I hope your colonoscopy goes well. And
Thanks. Sphincter check.
yeah.
Thanks,
Thank
Karie,
you.
for having me. This is fun.
Thank you. I'll talk to you later.
Okay, bye.
If you're looking for a peaceful, family-friendly neighborhood in Kernersville, Abington might be the perfect neighborhood for you. It's one of the most desirable communities in Kernersville. On this channel, I help you discover some of the best neighborhoods. I provide moving tips, and we give you information about real estate across the Triad area. So today, I'm excited to take you on a virtual tour of Abington. It's one of Kernersville's most desirable communities. So whether you're planning on moving here or you're just curious about what makes this neighborhood special, stick around and I'll give you all the details. First off, let's talk about location. Abington is in the heart of Kernersville with easy access to I-40 and US 421, which makes it perfect for commuters heading to Winston-Salem, Greensboro, or High Point. High Point and Greensboro are about a half an hour away. Winston-Salem is roughly 20 to 25 minutes away, and you're just a short drive from big name stores like Target, Walmart, Lowe's Hardware. It's about 15 minutes. And you have restaurants and everything that Kernersville has to offer in terms of shopping and that kind of thing is about 15 minutes away. So this central location is easy to enjoy the peace and quiet of suburban living without sacrificing convenience. If you love being in a residential area, but you still want the city just about 20 minutes away, this neighborhood might be perfect for you. Here in Kernersville, it's about an hour and a half drive to Charlotte and Raleigh. One of the things people love most about Abington is the peaceful, family-friendly atmosphere. It's a quiet, well-maintained neighborhood where neighbors look out for each other. So the streets are lined with mature trees. You often see kids riding their bikes or families out for walks. And residents here love the close-knit community feel. So if you're looking for a place where people know their neighbors, this might be a great place to be. So let's take a look at the homes in Abington. The neighborhood features single-family homes. Usually there are 3 to 4 bedrooms. There are some 5 bedrooms, and usually they're on large spacious lots. So it's typically about just under about half an acre for the homes. Home prices over the past year have ranged from the low 300s to the mid 400s, depending on the size and the upgrades. Average sales price has been around $329,000. So it's a great spot if you're looking for a quality home at a good value. The homes have a mix of brick and traditional siding. Most of the houses come with large backyards, so it's perfect for families who like to garden or play outside or just relax outdoors. So if you like planting flowers, setting up a space for kids to run around, or you enjoy having a barbecue with friends, these backyards are perfect for things like that. And they're good for like hosting gatherings, so like setting up a fire pit, installing a play set. You'll find a large variety of home sizes. They're from about 1,600 to over 3,500 square feet. So there's different sizes for everyone. Most homes were built in the late 80s and 90s, and some in the early 2000s. So let's talk about amenities. Abington has access to some great community resources. A big draw here is the Abington Pool, where residents can enjoy relaxing at the pool on the weekends, and like swim lessons for kids. There's also green spaces, nearby parks. So if you enjoy having like picnics, running, 4th of July Park is also not too far away. It's about 10 minutes away, and that park has like tennis courts, pickleball courts, basketball courts. There's a skateboarding park. So there's lots of different things that you can do over there. Schools are another big highlight. The neighborhood is known for Forsyth County schools. So it's going to be Piney Grove Elementary School, Kernersville Middle School, and East Forsyth High, which are relatively close by. In terms of shopping, you're pretty close to grocery stores like Lowe's Foods, and there's some local boutiques. So it's relatively close to downtown Kernersville, where you have some local coffee shops, bakeries. There's a few restaurants and bars downtown. So what are the pros and cons of living in Abington? So it is a peaceful, family-friendly environment. There's great schools. It's a great community type feel. There's spacious homes. Like I said, lot sizes are just under half an acre, so good sized lots. It's a convenient location, so it's close to major highways, and it's close to shopping. The home prices there are a little bit higher than some of the other Kernersville neighborhoods. They are a little bit older houses, so built in the 80s, 90s mostly. There's not much in terms of like nightlife or entertainment within the immediate area, so you might need to travel a little bit for that. Abington also has a community well, so that's where they get their water. Abington is a great place for people, families who want a safe, quiet environment with good schools. It's also a good option for professionals who need easy access to nearby cities, but they prefer more of like a suburban lifestyle. And if you're retired and you're looking for a peaceful community with great neighbors, you'll feel right at home here too. Thanks for taking this tour of Abington with me today. If you're thinking about making a move to Kernersville and you want more information about Abington or any other neighborhood, feel free to reach out. I'd love to help you find your perfect home. And don't forget to like and subscribe and hit the notification bell so that you never miss out on any of our neighborhood tours and home tours and just videos about the area and real estate tips. We also share investing tips and things like that. So definitely like and subscribe and hit the notification bell to be notified. We're also going to be covering other great Kernersville neighborhoods on this channel. So stay tuned to find out what makes Kernersville one of the most popular places to live in the Triad area.